Hello everyone. Yep, mic is on. Justin with Deep Dive Stocks here, and today this is your after hours market dive for Friday, September 20th, the 19th, 2025. Since it's Friday, we have a bit more time before the markets open, so it won't be quite as rushed. And we're going to look at a few more names than usual, and we're going to look at Apple, Tesla, SPX, Nvidia, Oracle, and a few others. So let's check it out. Let's get started. The first thing I want to talk about briefly is I've been getting some questions about the LDPMs, 1 through 7. What do they mean? And I think that's a great topic for a video. So that'll probably be the video I do next, either today or for tomorrow. But I just wanted to briefly give a quick synopsis so that we're all on the same page. When you add LDPM to your chart, the standard loadout, as I call it, is what you see here. You'll typically, in the default settings, have LDPMs 1 through 7 checked and present on your chart. And then you can change the colors and the thickness and the opacity as you see fit. Now, the number on the chart is to help us, and by that I mean LDPM 1 through 7 is just to kind of help us know which LDPM we're looking at so that we don't have to rely only on the numbers, or on the colors rather. But each LDPM has its own order. And these are the numbers 5 through 1597. This is just the Fibonacci sequence, hence the LDPM fib. Now, there's nothing particularly special about the Fibonacci sequence and what they relate with LDPM. More so, when I was designing LDPM, I saw that there was benefit in having these lower order LDPMs along with these higher order LDPMs, and especially as I dug a little bit more into the theory and, dare I say, even the math of it, it was pretty distinct that the lower orders and the higher orders would start migrating towards different parts of the market. But it became a game of cat and mouse trying to figure out which orders to use, and if 10 LDPM order 10 was being goofy, maybe LDPM order 12 will show a more advantageous display of the data, right? In other words, when it became apparent that having multiple LDPMs on a single chart, because they are measuring multiple different types of behaviors in the chart, the next step then became, okay, well then how do you stop sort of just whimsically choosing LDPMs to, fit with your bias of what the data should say? And so for that, I needed a way to standardize the movement of, up and down LDPM, but also in a way that sort of scaled so that it wasn't just like, LDPM 1, 2, 3, orders 1, 2, 3, 4, 5, but rather had a sort of progressively larger and larger distance between the LDPM so that you get a larger and larger sort of impact for choosing a higher order LDPM versus a higher order LDPM that might just be a few orders higher. Like, instead of 89, you choose, 90. So, that's supposed to be 5. And you'll notice that I set the defaults to skip even that. So it's like 5, but next is 8. But really, the default for LDPM 2 is 13, 34, 55, 144, so on and so forth. The true, if there is any cutoff, so before I talk about cutoffs, so that's the relationship between the LDPMs 1 through 7 and the orders. Now, I just use the default orders as they're here. That's kind of why I just made them the default. Occasionally, if you're really hunting for a usually organic bid, adding the orders 987 and 1597 can be beneficial. But I found that for the most part, things are typically respected at about the 610 level. And it's actually at the 89 level, order 89, that things become organic. So 55 and below is what is considered the eager parties or the aggressive parties, right? So those are the ones that are going to really show up when there's profit taking, when there's dip buying, and everything else below or above 89 and above is considered the organic parties. So those are the ones that are going to actually act as supports and act as resistances, rather than the eagers and the aggressives down here, which mainly deal with, it's not that they don't and can't act as a resistance or a support, but their main goal is to really tell us where this, profit taking and dip buying is occurring. And so there are times when dip buying will naturally act as a support. And so you might see a little bit of LDPM 55, order 55 acting like a support. But the true cutoff is 89. 89 and above is the organics, and anything below 89 is the aggressives or the eagers. You can add your own if you want, so manual LDPM if you want to add your own order. But I found that just using the fib sequence for its standardized ability, right? So you know that you're getting the same snapshot of liquidity on every chart that you put it on. It's the same orders. And that also helps you compare, equity to equity, but also the zooming in and out on the layers within a single equity. It just helps keep the measurement standardized. And I think that's a big thing. And that was really something that was impressed upon me when I was watching people use VWAP, because VWAP is just so whimsical. You can just kind of anchor it wherever you want, wherever you need, really is the word. And you can really craft your own data views to match the narrative and story that you're looking for. With the standardization by using the fib sequence, you're kind of removed a bit from that, because you now have to actively engage in changing that system if you want to replicate the whimsical nature of VWAP within LDPM. And that's also why there's only one. I try to discourage that, but it is, there are people who use their own LDPMs, and especially the time-based LDPMs. But I only put one of the manual LDPMs in here because I really like the idea, and I think there is immense benefit in having this standardized view. It's like, if you want to look at something, if you're going to be looking at a sample of items under a microscope, you probably want the same microscope to look under, or to look at all of those items. You don't want a microscope that has a 10 times magnification and then it gets swapped out for maybe 15 times magnification, and now you're trying to compare notes between those two. And I think that that's one of those hidden trip ups that people encounter in the market. And it's super prevalent when you start getting into the more traditional TA, where you really can just be whimsical, craft whatever data you want by anchoring things or just adjusting things. And again, it's not that that isn't a part of data analytics, but I think having that structured approach is the way to go. So that's that. I'll do another. I'm definitely going to do a video on this, but I thought I might just get that out of the way. I've been having a lot of questions. And that's why usually, you can leave. I would say it's 50-50 for those who reach out, who leave the lower order LDPMs on, and those like me who just kind of keep the higher orders on. But kind of like I said earlier, or in yesterday's video, I've been becoming a fan a little bit of leaving LDPM 3 on, which is order 34. And again, I never change these ever. So any video, tweet, if you see anything and it has these LDPMs, unless specified specifically, these are exactly the ones that I use. I should be a little better in annotating that, but then sometimes I feel like it just gets a little too cluttery if I write like LDPM L7 parentheses, 610. So it's just that balance. But now that you're here, now that you're chewing through LDPM and LDPS, it's time to open up a little bit of Pandora's box. And this is the first thing you're going to encounter. You can absolutely change these. I truly don't recommend it. Or like adding your own manual rather. Changing these is, I think, fine. I know a few people actually add LDPM twice, and then instead of skipping every other one, so they just add every single one so that you get every LDPM on the chart. But you do need to add LDPM twice for that. And then just real quick with LDPS, unless specified otherwise, I always leave it on balanced. I think it's balanced. It's what it's kind of designed to do. So it's going to still have a little bit of false flags, but its job is to really balance false flags, but being early on liquidity changes. In yesterday's video, we did move it to aggressive when we were looking at yesterday's video, which I filmed on the short squeeze. I did move it to aggressive because aggressive is going to be the tool that gives you, as soon as a small drop of bearish or bullish liquidity is noted, the aggressive algorithm is designed to indicate that, right? So you get a little bit more of the false flags, but you tend to be very early on sort of these regime changes that are ongoing. It just, requires you to be a bit more nimble on your feet. And then the opposite with the conservative and diamond, those are more so designed to be really stubborn. They don't want to change. LDPS doesn't want to change its outlooks on these two unless there is some really substantial evidence and some really convincing reasoning. So LDPS I always leave unbalanced, and I always use full for the LDPS detail amount. You don't have to. Simplified, I think, just simplifies things a little bit, but full, that's where you get if it's indications of eagers and aggressives, but if that's not your cup of tea, if you're not too concerned with that, you can just put it on simplified. And then I think the only difference from the default is that instead of interpretive for the reporting style, I just do declarative. The interpretive just will give you bullish, bearish, but declarative is the one that actually tells us, where things are transacting. And so if we do interpretive, right, so we just get bearish flow to ask. But when we move it back to declarative, we can see that it's bearish because we're actually at the organic bid and we're flowing to ask. So yeah, I think that's probably a good little recap of the settings for LDPM and LDPS. And yeah, I definitely think it's worth doing another video. It's really a product, unfortunately, just the last thing I'll say on it, I wanted initially to label the LDPMs not necessarily based off of 1 through 7. I wanted to label them based off the order that they were. So LDPM L7 would actually say LDPM 610, which was actually how it used to be. But in one of the recent changes, you can't do that anymore. So you can't have this. So TradingView or PineScript won't let you have these dynamic labels on the chart. So I unfortunately can't do, and I tried a whole bunch of tricks, it won't let you. I couldn't find a way to make it think that it was reading a constant when it gets to the drawing these labels, when it was really reading a dynamic variable, which was, the input that you guys and that I'm providing. Occasionally I still try to hit my head against the wall for this, because it would really simplify things, I think, if they could just have the orders here, but for now, I can't really do that. So, with that out of the way, let's get started. Thank you for hanging out if that was all old news for you, but I hope if it was new for you, I hope it was insightful, clear. If not, let me know. Throw something at me. So I figured we could start with Apple. It's doing some fun stuff, and since it's the end of the week on Friday, I figured we would check out the weekly view first. In the weekly view, we see, admittedly, a strange phenomenon. We have this obvious bearish liquidity, which started in March. Yeah, because this is the weekly. I was like, how did we get from February to March on one candle? Because this is the weekly. So we have this bearish liquidity. We come down to support, and it looks like we're doing a normal bounce. But the expected outcome would be, even with this bearish liquidity, well, the expected outcome is that we would go down, right? That the support would fail under the weight of that bearish liquidity. But we see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 tests of the support, and in each time LDPM L7 or order 610 managed to fight things back. The result, though, is still, as long as the liquidity is bearish, we expect the support to fail, or we expect the support to give bullish liquidity, and then we would bounce back up. We got the first half, or the second half, we got this bounce back up to the resistance. And in this case, that, the idea is that the resistance is going to hold because the liquidity is bearish, even though you can argue this is definitely a bear trap. Like I said, Apple on the week is sort of strange because this is a bear trap, right? So you do expect it to come up, but we don't get during this recovery any bullish liquidity. That's the one odd part. And as long as that bullish liquidity is not present, we don't really expect these support or these resistances to break. And yet we see that it broke. So what does that mean for us? Well, it's not a bear trap anymore, which is good news. LDPM L5, 6, 7, that is technically a bull stack for LDPM. And we have bearish liquidity, so this is just slightly bearish, right? The outcome, though, or the expectation is still, if we kind of draw, I guess this is going to be super hand wavy. But if we kind of anticipate where LDPM is going to go, this LDPM L5 and L6, and no matter where you anticipate it to go, so I guess it doesn't really matter if you do that. But with this bearish liquidity, we do expect still another test of L5 and L6. So although this week's almost 5% performance is quite exciting, this still suggests that it's probably gonna give some back, because we've kind of gone from this bear trap orientation to now we're actually just bearish, right? We have this bearish liquidity, we're above this bullish LDPM stack, and so the outcome is still the same as always, even though it looks a little, the environment looks a little different. The outcome is still, we're going to retest LDPM L5 and L6. But I just thought I'd mention it. This gives an immediate impression of, a high potential of a pullback for the week ahead, as it likely is going to try to move down to, and if we cut the difference between this little spike here and where things were, we see like 237. So not terrible, but as long as that liquidity maintains its bearish prints, as long as LDPS maintains its bearish prints, that is the expectation. Even though, again, like this is we do have like a little bit of evidence of this aggressive bid that walked in, but you would still kind of expect that to change liquidity to bearish or bullish, and it hasn't. So let's check out the 1 day. And we can see here on the 1 day that to even sort of corroborate this view is that we do have, upon immediate inspection, we have bullish liquidity. We're at the organic ask, but we're neutral. If you watch the video, and if you haven't, I definitely recommend it. But on what I suspect is the shorting on the ES futures that happened on Wednesday, the significance of the neutral should be impressed upon you. But if not, definitely go check that video out. In a nutshell, though, neutral means that if you throw a ball up and then it kind of hangs out for a second and then falls, this is the neutral part as far as liquidity is concerned. So we see in June, we had this kind of, actually, let's put all the LDPMs on. Like I said, it's gonna be a little longer video. This is a video maybe you hang out to. So we see this really classic, stop that. Several aggressive ask cascades come in. And then we have this scoop, and we can actually see LDPM L5 is scooping, which is not too common, but we see that it is in fact scooping. So we had these initial scoops that helped support spot, and then LDPM L5 came along, which typically acts more as like that support, that organic, in this case, the organic bid. But it scooped, an organic bid came under spot. We see here a brief aggressive bid cascade, a little bit of the wave brought spot down, and then another aggressive bid cascade and a wave. And this wave, though, what we normally consider like here to be profit taking, isn't really present on Apple right now. So we have this pretty bullish liquidity without evidence of profit taking, but we can see that this whole kind of shindig here, especially, which is a bull trap, because we have LDPM in its bearish layout or configuration. So we have 7, 6, and 5. And we can see that this has really been maintained by these aggressive bid cascades, this bull trap. And so it looks like another one is currently underway as well. And so it does look like there is someone who is walking in and sort of pushing Apple up quite aggressively. But so much so that we do see these like immediate profit takings occur right afterwards. It's just right now that we don't really see any. But LDPM isn't, it's curving, but it isn't uninverting in a dramatic fashion, which, drama is really all we're here for, right? So, but it's not. It's kind of casually finishing its scoop and then moving up. So the outlook is bullish because liquidity is bullish, but it's that tenuous, unstable bullishness where the rapid unwinding of this bull trap is very much a real concern, right? Until LDPM kind of finishes its thing and the LDPMs uninvert, and then we get bullish liquidity with some nice LDPM bull stack. But it seems like on the daily, we have a increased threat of price stagnating and testing LDPM L7 and 6, right? And that's mainly, and I'm deriving this mainly because of this neutral designation. Because if we are constantly having these aggressive bid cascades, then the liquidity flow we should expect is to the ask, because we have an aggressive bid entering, it digests up all the way to that organic ask, and so much so that that's where we are transacting. But as soon as we start seeing this liquidity turn neutral, then we know that there's a little bit of ask that is starting to digest that aggressive bid. So it's no longer the aggressive bid that is just walking to the front door of the organic ask, knocking on the door and saying, how much do you want for these shares? It's now there's someone on the front lawn of the organic ask's little domicile saying, I want, now I actually need to start selling. I don't need you to go to the organic ask for your obligation. I'm here also with obligation. Let's meet on the sidewalk. And so that's kind of what that means. And so that's why I expect price to sort of start stagnating. And this is usually the first sign that an aggressive bid cascade is starting to fail. But this is a pretty interesting little show out. It does tell us that the Apple since, June 25th-ish has really been maintained by these aggressive parties walking in. And it may be that if those aggressive parties don't walk in, or those aggressive parties start transacting on the sidewalk and not at the front door of the organic ask, then, the house of cards kind of collapses. So let's take a look at what's going on the 15 minutes. So what happened today? So a little bit of profit taking. We see those lower order LDPMs above spot. Let's go ahead and go back to our more standardized view. It's actually 3 that I leave on, not 4. Thank you. So we see, let's go ahead and watch this. LDPM did a weird thing. Let's look that up. Let's look at what it did there. All right, so this is Thursday at 10 in the morning. So we have this bearish liquidity. We do briefly get near LDPM L7, but I missed it. But as long as this liquidity remains bearish, the expectation is that it will test the LDPM support again. Let's go one by one. So we can see that it's being pushed, this LDPM L3s, remember that's an eager party, so that's someone, eagerly exiting their position. Typically, we good number profit taking. There was someone else described them just kind of with a different word that also made sense, but I can't remember. So we had this a little bit of this aggressive ask walk in. We could see it really only pokes its head in L5. By the time it makes its way up to L6, it's only a little notch in the belt. And it looks like that's just where they're staying actually. So what was this ask just kind of increased. So we get down to L7 maybe. Or we have a little bit of this scoop. This is a little bit of aggressive ask cascade. Right at market open. So we do that. We get this ask that walks in. Still, but maintains bid. And then liquidity turns bullish around 4 in the morning. Then what? Is that today then? So we get bullish, bullish, bullish. We go to LDPM L6 as expected. Takes a few attempts to break through. And as soon as we break through, we can see that we start zooming on upwards. And it's not until we see those profit takers, in this case just with the LDPM L3, pop its head up, that price starts to stagnate a little bit. And so this is this should look familiar. This isn't the exact pattern that we're super used to, but this LDPM L5 is likely going to come up like this. And as spot sort of migrates down to L5, and then it's going to be in this area that we want to really keep an eye out for the introduction of any bearish liquidity. If LDPS maintains bullish liquidity as spot taps L5 for support, then we expect a bounce. If we start seeing bearish liquidity form, then it'll probably break through and then ultimately fall. And if, I keep saying it, but if you've been watching these videos recently, this pattern should be almost boring to you at this point. Because you're just going to, and if it's not, it will be. Because you just see it over and over and over and over again. And so Apple. So in a nutshell, what's going on with Apple? So on the near term, we have this bullish liquidity. Some risk that this profit taking is going to be maybe a little too zealous. So we're going to have to test LDPM L5 for that reintroduction of this nice organic bid bullish liquidity. And in the meantime, we just need to monitor for bearish LDPS prints. But if none of those occur, which it doesn't look like any have happened, then we should expect another bounce. Now, in the near term, so if we're expecting a little bit of a bounce in the near term, is that going to meet any resistances as we zoom up? And we see on the daily, there were no true resistances noted, but we are still in this bull trap configuration. And so we do have to be a little bit more nimble than usual in just monitoring for downside, because these bull traps have absolutely been known to just, in a single candle, bring things right down back below LDPM 5. So essentially, it's not uncommon to see that bull trap or the trap in general unravel and just bring things right back to where they were in accordance to the LDPM stack. So bullish, no true resistances, but keeping a close eye on liquidity here. And especially, I guess, in that 15-minute, because we do see, we do expect at least a reasonable approach of bearish liquidity as those SPY and LDPM 5 meet. On the weekly, we see still also downside risk, right? So it would be most ideal if the recovery of this bear trap, in this case, presented with bullish liquidity, LDPS started painting things green, but that just hasn't happened. And so the outlook is still on the weekly a retest of that LDPM L5, L6. So, and I hope that this is starting to view a picture of, what it is to zoom in and out on an equity, right? You can kind of just get the overview, more local environment, and then down into the daily, which is down in the 15-minute. And really the name of the game is, so these are the data prints from all of these three levels within this equity, and what picture does that paint, right? It paints a tenuously, teeteringly, slightly bearish outlook. So moving on to GME, I thought that this would also be interesting to check in now on the weekly. So, all right, I'm back. I had to pause the video because it was getting a little hot. Sure, I had to turn the fan on. So anyway, so here we are. We have GME on the weekly. What do we got? So bearish prints, right? We do see an eager ask and we're flowing to the ask. So we're transacting with an eager ask. So we're moving down, but it looks like the eager ask is getting, so the eager ask, this is actually a strange configuration. This is cooking my brain a little bit. So an eager ask means that there are parties that are moving beyond the organic ask to initiate transactions. And that means that they're moving to the bid. But we see this flow to the ask, which means that the ask is actually the one that is starting to set the ability to trade, which means that there's more demand to trade on the bid. So this is a pretty bullish configuration. It suggests that the bid is digesting through this eager ask. And so that means that the next stop is the organic ask up top. And so if the float of the ask continues, I would expect this to switch to an eager bid, and then that means it's definitely starting to digest up to the ask. Transacting at that organic ask is a pretty bullish sign, as the ask traditionally. This might be a good video to see if this is the same on GME, considering its more nefarious status for short sellers, but in traditional equities, which I feel like is fair to say, the organic ask is the one that will work to sort of organically just move the price up, right? To buy low and then to sell higher tomorrow. Well, if you're in charge of the price and your job is to sell high, then that's what you're going to do, right? You're going to move spot up. So LDPS is mixed, right? It's telling us that things are still bearish because we do still have an eager ask, which means things are flowing. There is an ask that is moving down to that bid, but a little bit of bullishness poking through as we see that there is a counter eager bid that is now digesting the ask. And if none of that makes sense, definitely check out the video I did last week that goes over a little bit more of the detail of LDPS and what the text means. So in any case, this does unfortunately give increased risk of needing to move back to LDPM L7 and L5 for support on the weekly. And so if I wanted to really have confidence in a bullish outlook, if I wanted to form a bullish outlook and have confidence in it, then I'm definitely on the weekly keeping an eye out to make sure that this eager ask switches over to an eager bid soon, which would tell us that the flow to the ask is indeed digesting, the bid is indeed digesting the eager ask, and now the predominant player is the eager bid. And the eager bid would move spot up, and it looks like our next target would be 13% up at LDPM L6 at 28.20. And so that would be the most bullish ideal situation. We start seeing this flow to ask really manifest itself as a true eager bid to work its way up to the resistance at LDPM L6. But for now, with LDPS maintaining its, maybe if we're super lucky, we might get aggressive is telling us already things are bullish. So, but this is like the game you play. It's hard to know how much of that is a false flag, right? So when we turn it to aggressive, when we tell LDPS, hey, listen, I just want you to tell me what is sort of kind of predominantly occurring right now with no regard to what's been happening. LDPS tells us back things are bullish. And it says, in fact, that we do have this eager bid. And we can actually see it's flipped. So we actually see that the converse, the eager ask that we saw with the balanced is indeed trying to push down through that bid, but the bid is the predominant party. So, but again, this is that aggressive setting. So this is a very sensitive, it is detecting something. LDPS on the aggressive scale is fine with what it's detecting, such that it's painting the candles green for bullish. But I mean, that's a good sign. I'll say that's a good sign. But when I derive my opinions on what it looks like a stock is going to do, again, I just kind of really like the balanced setting. But the aggressive being bullish already is not a terrible sign. So it's like a weird tentatively bullish on the weekly for GME, but not being surprised if we have to move to LDPM L7 at 22.92 to test support. That just might happen. Oh wait, we didn't even. So on the daily though, so if we zoom in, we see we have bullish liquidity, a little bit of a mixed LDPM stack, but this is true bullish, right? Like the LDPM L6 as the next resistance at 29.35, which is about 13% up. There's no evidence of profit taking, so at least per LDPM L3, we don't see it kind of like zooming up here and indicating that profit taking is well underway. Instead, we see it hanging out down here with the bids, and so that's it's definitely dip buying activity with this LDPS bullish liquidity, and so the outlook is LDPM L6 is the next stop. So it would definitely be interesting to watch as spot, if this maintains its bullish outlook and spot moves up to LDPM L6, then checking on the weekly to see if that balanced LDPS finally switches over to bullish, and then that would be a thumbs up sign for sure. So we had that tentatively, we had the kind of mixed on the weekly, that looked like it was leaning towards changing to bullish, but if you're someone who's a little bit more on the conservative side and you don't want to anticipate what the data are going to do, and you just like looking at the data and then anticipating what the equity is going to do, that might not be a convincing argument for you. For those who are a little hopeful in that the aggressive LDPS's bullish indications will increase and then finally convince the balanced to also be bullish, these are reasonably bullish signs. On the 15-minute, again, because nothing on GME can ever be straightforward, ever, we have a bull trap. So it seems that today at 9:30, we had this LDPM L5 resistance was overtaken. We had this nice dip buying, probably helped with that. We have a little, is that an aggressive cascade? I like my aggressive cascades to be very pointy, right? I like it to be very distinct. This is kind of like, so a little noisy, not a true aggressive cascade, but it does seem like it brought things pretty close to LDPM L6 at 26.48. Looks like the high was at 26.39. A pesky 9 cents off. LDPM is trash. But it gets rejected, it fails, and then here we get the introduction of this profit taking, this more eager selling going on, and current bullish liquidity is actually LDPM L5 is supporting this bullish liquidity quite nicely, it turns out. So again, mixed because it's GME, and I imagine that the people who have been following GME for a while, again, I kind of just, whenever something's interesting going on, I kind of just look at it. But I imagine those following GME for a while are pretty used to this idea of GME doing weird things. And so it may not be too surprising to find out that that's also still occurring. But so what are the expectations from this? Well, bullish liquidity still tells us that we're going to probably do another attempt at LDPM L6 as long as this support holds. But the fact that it's a bear trap, or a bull trap rather, suggests that there is a heightened risk of this like immediate return to sort of where things should be, right? And that's almost the authority on that is almost always LDPM. And so it's really one of those, this is definitely a situation that you kind of got to just gonna have to monitor, any introduction of like, even if like inter-candle start getting some bearish flashing going through as the candle is finishing in its 15-minute chunk, then that would start raising some flags, some warning signs for me. But as long as this liquidity maintains its bullish stance, then we do expect, even though it's a bull trap, we do still expect that the bounce to bounce, sort of like here. We tried once, it's not terrible, we did get rejected, but it's not about getting rejected. It's about getting rejected, standing up, and getting rejected again. That's what it's about. And that is what's going on here on GME. As long as it's bullish, we expect it to go up, but definitely close eye on this bull trap. And then, look at these LDPMs. Find another equity that has such a messy LDPM and LDPS. And it's hard to, because GME's got some crazy, and a little bit of an aggressive bid cascade going on here. We see that, and here's that pattern that we talked about earlier that you're going to start seeing, that you probably have seen if you've been watching the videos or using LDPM and LDPS yourself, which, by the way, you can get at deepdivestocks.com/membership. There's a code for 30% off for 3 months if you're interested, or if you want, you can just email me and I'll give you like a few weeks trial and test it out. Email me your TradingView username. As far as what my email is, you're going to have to find that out on your own. I'm just joking, I'll put it somewhere. But here's that pattern. We have that little bounce, aggressive bid cascade. We have the scoop or the wave going through. And then remember when we said that spot sort of flatlines, and then we know that LDPM is going to start coming up, and it's going to be that the little, as they approach, what starts happening. And we see that here we get that bearish liquidity, and so we just slice through LDPM L5 and fall down as expected. If bullish liquidity had been maintained, which we see for a brief moment in an attempt here, then we would have expected movement back up. Let me try to, But we didn't. We got bearish liquidity and it fell. And Messy. And so that's where we're at now. Hopefully bullish. I think that's optimistically bullish. There's there's a phrase, but all right, we got to move this along because I said a little longer than normal, but this is becoming a lot longer than normal. So SPX on the weekly, now that we are warmed up with GME and Apple, let's start speeding through this. So we do see signs of an aggressive bid cascade. We have this eager bid, a little bit of flow to bid, so it is being digested somewhat, but we don't see any signs of profit taking, and we see bullish liquidity. So on the weekly, this is pretty bullish. This aggressive bid cascade means that we should, in the next week or two, keep an eye out for the wave, see if there's any aggressive profit taking that goes on, because the current bullish support, that organic bid, if needed, is currently not including this aggressive bid cascade underway, currently about 8% down. So if we start seeing that profit taking come through after this aggressive bid cascade and start moving spot down, then it's an 8% move until the next support, which is, I think, reasonably far. If we zoom in to the daily, there's your aggressive ass cascades. We have this messy scoop going on. I always like seeing it with the context of what we're seeing things in, because the market is this evolving creature, right? It's an evolving, in a sense, it's made up of creatures, and so it is kind of itself this weird creature, almost like a little cyanophore. But we do have this bullish liquidity. We were in a bull trap, but things are, it seems, unwinding from that, and LDPM L5 is making its way up. And so this is, even on the daily, a pretty bullish print. There's no resistances above. We don't see any evidence of profit taking. We did have these flashes of bearish liquidity going on, but it looks like that's dissipated. And we did have that aggressive bid cascade on the weekly, and so it looks like even on the daily, things are looking pretty bullish. And then if we zoom in on the 15, and the 15 is going to be helpful in figuring out what might happen over the next few days or so. So the weekly is, you're looking at like 3 to 6 months out, right? And the daily, you're looking probably a week to 2 weeks out. The 15-minute, you're looking about a day to 2 days out. So lo and behold, here's that pattern again. It looks like we would have gotten our ankles broken here on Monday and Friday as we get that bearish liquidities, and it even broke through. So we would expect movement back down to LDPM L6. But it looks like someone came in, provided a little bit of bullish support, and that didn't last very long. And by Monday at noon, we had the introduction of this bearish liquidity on its way to LDPM L6 as expected. It touches LDPM L6. Looks like LDPM L6 fails as a support. We have that shorting that I kind of pointed out in that video. This aggressive bid cascade walks in. We have the wave happening, this profit taking, and looks like spot survived. But it looks like it's not making it over LDPM L6 yet, right? Which is what we would expect. So if it has that support, it's bullish liquidity, we expect it to go to that next level of resistance, and if bullish liquidity is maintained, to break above it. So that's not probably, but that does seem like the process underway currently. And it's just unfortunate that the current testing of LDPM L6 was not successful. It did not cross over. So all in all, the S&P 500 is looking pretty bullish. It feels kind of weird to say, seeing as how strange the market's being, but liquidity is liquidity, right? So moving right along, we have Oracle doing big things. We had, let's watch on the weekly. I don't know if this is going to be like super slow or super fast, because a lot of data, I think. So, and I missed all of it. Hold on, we try that again. All right, so we have this bullish run. We have this nice bull stack. And then, so price stagnates a little bit. So this is one of those moments where you're like, it's not going to be unreasonable if we have to test LDPM L5. We do get a little flash there of bearish liquidity. But it looks like on January, an aggressive bid cascade walks in, helps keep price afloat. A little bit of bearish, so bearish. Now we're going down to LDPM L5. And we break through, we go to 6. We recover, now we're just bearish. Aggressive bid walks in. This aggressive bid helps keep things afloat. Another aggressive bid walks in. And this is what I'm talking about, where the aggressive bid should change the candle to bullish, especially on unbalanced. We have a little bit of profit taking underway. Another aggressive bid walks in last week, and that's where we are. So it looks like there's been these several episodes of an aggressive bid walking in and then spot overcoming this profit taking that follows. So no real overt signs of anything crazy happening, except for the fact that there is now a liquidity vacuum from current spot down to bullish support at 45%. So that means if spot does need bullish liquidity, if it needs to tap into that organic bid is located at nearest 45% down, which is a hefty amount. We do have this gap. We do have LDPM L5 now with a little bit of a stagnating price. So even with this bullish liquidity, it looks like it's not too unreasonable to expect testing LDPM L5, which is currently 15% down on the daily, as a reasonable expectation. But again, as long as the liquidity is, if LDPS maintains bullish prints as we touch LDPM L5, we should see another scoop back up. But if we start getting introduction of this bearish liquidity, then we can expect to break through that LDPM L5 support, and barring the introduction of any super serendipitous aggressive bid cascades, the outcome is to continue downwards. Although again, keep in mind that this was a rapid reversion of this declining price, and this is a bear trap. We have that 5, 6, 7 LDPM stack. We have LDPS is bearish. And this is what I'm talking about. This is a pretty, it's one of those frustrating things about, once you can start really reliably identifying these traps, it's almost like a double-edged sword, because now you get to play in them. You can, have it's like being a bomb person, like you get the suit, but then you realize that it's a bomb for a reason. It's a trap for a reason. And even these types of behaviors with LDPM and LDPS, you can't really predict when someone is ultra aggressive entering the market and are just going to slam trading up to the ask. It'd be interesting, and maybe I'll do look into the data here and see if this was a little bit of a short squeeze as well. It's usually what you see when you see these giant liquidity vacuums formed. So what does this mean for us today? Well, things are still bullish, but testing LDPM L5 at about 15% down is currently not outside of the question. Although we don't really see much profit taking, we are seeing this stagnant price. So definitely something to keep an eye out for. If we move to the 15-minute, what do we see? A bull trap. So that definitely adds a little bit of credence to our more daily outlook. So if we zoom back to Thursday, we get after hours. We're clinging on to, we get bullish liquidity. So we're probably going to make it up to LDPM L6. We do, then we're still bullish, so we use LDPM L6 as support. But we know ultimately we're going to try to get up to LDPM L7, which looks like sort of attempted today, but didn't quite make it. We do have this LDPM L3 showing us that there is dip buying below spot. And so there's no reason to expect another attempt to reach LDPM L7. But again, this is a bull trap, and that's 1%. So maybe a little hand wavy, right? So say on the 15-minute, we touch LDPM L7, and then that slams us all the way back down because we're in a bull trap. And then on the daily, we would see that start to instigate more of a decline as LDPM comes up. And then again, we'll have to keep an eye out on if bearish liquidity pokes through and initiate something, or if bullish is maintained and we just bounce. So reasonable, but I mean, not reasonable. Oracle is up like 40% this week. That's not a reasonable market. This isn't a normal market, but whatever. Who am I? I just know about liquidity. It's up to the market participants to do what they will with the liquidity they have. I'm just measuring it. So if we have here, we have this bull trap. This is I moved to Tesla, by the way. This is Tesla on the weekly. We can see prior to 2025, we have the development of this bull trap. I guess not 6, 5. I guess my colors are a little mixed up, but we do have L5 below. And so we get this bullish run. We make it through LDPM L6 quite nicely. We stagnate price a little bit, so we know we're going to need to probably test support. This does test support with bullish liquidity, so we would have expected movement up, but it looks like that next week opened below LDPM L6 with bearish liquidity, so we know that that's less likely now. Even though we, again, went to test this support, but it looks like price has been stagnating. And I wonder if this is a little bit of an aggressive bid that walked in, pushing things above LDPM L6 and maintaining its bullish liquidity this week. So the outlook on the weekly for Tesla is pretty bullish. We don't even really have like this really solid, distinct bull trap to sort of point our fingers at and say, haha, you're going to crash soon. But nope, this is just bullish. It's interesting to see just how well this price was confined within the LDPMs for 4 months. And just now we're breaking through with this bullish liquidity, so that is reasonably bullish. Let's get rid of these drawings. If we zoom into the daily, we get even still another, yeah, there's that aggressive bid. We get another showcasing of this aggressive bid. We have a little bit of profit taking. It seems like it's on the way, but nothing above spot currently. Let me set to automatic. And LDPS is showing us that we are transacting at the organic ask, and we're even still flowing up to the ask. So the bid's demand to transact is greater than the asks is right now. And so the ask is the one in charge. The control is flowing to the ask. The price, at first I think in prior videos worried a little bit about stagnation, but it does seem like we're climbing ever so briefly. And so bullish still appears to be the outlook here on the daily for Tesla. If bearish liquidity enters or there is a need for support, it looks like it's 16% down, which would be quite substantial. Although Tesla, it's known for big moves. But for now, the weekly and the daily are both leaning reasonably bullish without really any evidence of like active obstruction. Like we always have because of these patterns, you're going to get really familiar with them. You're going to kind of really start to just feel it more than be able, looking at it. If anyone here is in the medical field, it's to me very similar brain space as reading EKGs. At first it looks you try to learn EKGs and the squiggles are just squiggles and they're nothing but squiggles, and it really just feels like a game of matching squiggles to squiggles. But as you start digesting it and as you start matching it with real world experience, and it suddenly becomes like the Matrix. You just look at an EKG and you're like, that's a block. I know what that is. I know where that STEMI's happening. And that's kind of what LDPM is like. So if we zoom in on Tesla on the 15, we immediately see that as of Friday at 9:45, we're officially in a bull trap when LDPM L6 beelined it to go underneath L7 in parallel with LDPM L5. And so the liquidity is bullish. So we still expect a movement up to 434, which is what? 2% up, not terrible. We did have some profit taking. It seems like impeding a little bit of this churning. And there is support located spot down, but again, bull trap. So the risk or the probability of a sudden reversion of spot back below LDPM L5 is particularly high. And this is anecdotal. I haven't really looked at it, but those types of moments too almost always occur. Those rapid shifts. It's either like the immediate introduction of an aggressive party, or they're the things that magically just happen overnight, right? Like an equity opens the next morning and it's magically back below LDPM L5, and somehow no one really understands how that happened, but from this view, from LDPM with LDPM and LDPS, it's almost always because it's some sort of trap, and then we've just magically jumped and sprung the trap and moved spot back to where it should be. So tentatively bullish on the 15-minute, looking like a little bit of support or a little bit of resistance at 434 and then 442 if spot makes it there during its bull trap. But there is ample support on the 15-minute. There is bullish liquidity on the daily with support located quite a bit of ways down though. And on the weekly, we get bullish outlooks again, and with support located even further down if necessary, 20% or so. So tentatively bullish again on Tesla. I think almost it's weird. Maybe I am just a perma bear, because anytime something's bullish, I'm like, it's tenuously bullish. But then if something's bearish, I'm like, it's going to the floor. It's about to dig itself a grave. But then we see this and I'm like, be cautious, right? But, things are overheating, I think that's fair. Because these liquidity gaps are obscene. This is a 60% liquidity gap between the spot and current LDPM L5. Even though we're still maintaining this bullish liquidity, it really is just telling us that the true organic bids are still kind of value seeking at 40, around current 50 to 47, depending on, this looks like the reintroduction of another bid, but you can see like L3 is it aggressive? I don't know. We don't have enough data. This is Robinhood on the weekly, by the way. I changed it if you weren't noticing. And so, but this is bullish, right? Tentatively bullish, and it's just one of those things that, if a pullback does occur, as long as it's bullish, we should be fine. Normally that statement ends there, but then when you start saying that the pullback could lead up to anywhere between a 50 to a 60% reduction in value, you start asking yourself, how long am I going to be alive for? And is that going to be recoverable within my expected time frame? And if we move into the daily, we see, again, much better bullish conditions. We have recently undergone this little bearish excursion, a little bear trap formed here. And see what I mean? Perfect example, right? So we have this bear trap, right? And then the next week just opens up right above. So it undoes the bear trap part, even though it does still give a bearish inclination that we're going to test LDPM L5 support. And it tests LDPM L5 support holds. The outlook would have been, if bearish liquidity continues, we're going to test again. And if bearish liquidity continues, we're going to test again. And then eventually we're going to test down below, right? We're going to fall through. But we see we no longer have to worry about that because we are now printing bullish prints. So this very short-lived bear trap unsprung itself. And then we just followed normal protocol, expecting things to test out LDPM L5, and now we have bullish liquidity. So there's nothing really to worry about. Looks like bullish liquidity is reigning supreme. It's actually only an 8% drop to support on the 15-minute if we were even to need it. This is the daily, I'm sorry. But things are looking bullish. So that does alleviate a little bit of the concerns from the weekly view with that some 50 to 60% drop. A very messy, this might be worthy of its own little investigation. Maybe I'll look at that later and do a video if anyone is interested. If you're interested, you got to write it in the comments because otherwise I don't know. And if I don't know what you want, how can I give you what you want? I'm not a mind reader. I'm a nerd. I do numbers. I like to type things. So if you want to see a video on what might have been happening, even if it's nothing, just, hey, Justin, can you look at this and make a quick video about it? Let me know, and I'll do it. The current conditions are bullish. Looks like we were testing support at LDPM L5 throughout the day. L6 and L5 are in parallel now, so we have this this bull stack configuration, and with bullish liquidity, and so the outlook is up. So Robinhood is looking bullish on several fronts, which is exciting. I know there's a thing against Robinhood, but it's an innovator. It's doing some cool stuff. And it looks like it's reflecting in the stock price. So, all right, I guess the last thing we can do is let's look at the ETFs. Let's use the Liquidity Scanner to look at the ETFs. Let's look at the 15 minutes. All right, what are we looking at? So we have futures, we have, it looks like bonds, this is commodities, this is crypto, and this is like full market ETFs. And we mainly have bearish liquidity here on the 15-minute on crypto. Oh, wow, yeah, look at this. Definitely been, so it's cool because you can see like where the bearish liquidity started, right? So we had, because the lines are drawn equally. Yeah, look at that, that's crazy. And then things went bullish. So price flatline is never too good of a sign when just bullish liquidity does nothing but just help keep the spot flat. But all that to say, we have this bearish liquidity that has entered finally on the crypto ETFs. And a little bit of bearish liquidity poking through on SPY and IVV, but everything else is looking pretty bullish, especially these. That's the 15-minute though, so let's go to the daily. And where do we see weakness? Again, on this this Bitcoin ETF, this Ethereum ETF, and just Bitcoin in general. I just have that there. A little bit of softness on the daily in the commodities, but nothing crazy. TLT is bearish. That's unfortunate. It's been maintaining its nice little. It's been struggling. Maybe that'll be in the next after hours market. And then we've seen futures are pretty bullish. And so, yeah, that's not too shabby. So tentatively bullish on a lot of stuff, even though it seems like maybe if you were to just look at from the outside looking in, it maybe shouldn't seem that way, but that is how liquidity is flowing, and who are we to say otherwise? So this has been, like I said, a little longer than usual, but I hope you've hung around, and if you have, thank you. If you do want to see anything talked about or mentioned in the videos, just write a comment, email me, and I'll make it happen. I've been enjoying these videos, and as long as you guys have been enjoying them as well, I'll keep making them. If you are interested in using LDPM and LDPS and liquidity levels and the scanner yourself, and you can go get a membership at deepdivestocks.com/membership, or if you want to try it out, just send me an email, send me a message on Twitter, however you can get a hold of me. Not on TradingView though, if you don't mind. TradingView messages just escape my radar quite frequently, and it might be quite a while until I get back to you, because I just genuinely always forget that people talk on a trading app. But I guess that's all, and I will see you guys next time. Thanks for hanging out, and adios. Bye.